Good morning, Alex and friends. I'm Grace. Today is Friday, July 31st, 2026, and you're listening to Alex's News. It is going to be a scorching day in Riverside, with temperatures reaching a high of 101 degrees before dropping to a low of 68.3 tonight. Make sure to prioritize cooling off and staying hydrated if you need to be outside today. In today's show, we are taking a closer look at the factors contributing to the recent cooling of the American economy. We will also examine the ongoing controversy surrounding Governor Newsom and the potential legal protections being offered to utility companies regarding wildfire liability. On top of these reports, we have a variety of other headlines to catch you up on as we head into the weekend. All this and more coming up on Alex's News. Stay tuned. Good morning, everyone. The latest read on the U.S. economy is out, and it paints a complicated picture. Growth is slowing, prices are still climbing, and a war overseas is making it all harder to untangle. Here to walk us through it is our economics reporter, Ethan. Ethan, good morning.
Good morning, Grace. It really is a tangled story right now. The headline number came from the Commerce Department's Bureau of Economic Analysis, and it showed the economy losing some steam. Gross domestic product grew at an annual rate of 1.5% in the second quarter of 2026. That's a step down, and it caught a lot of forecasters off guard.
A step down from what exactly? Give us the comparison.
Sure, in the first quarter, the economy grew at 2.1%, so we've slipped noticeably from there. And it missed expectations too. According to Reuters, by way of NBC News, economists had been polled at 2.1%. Their estimates ranged anywhere from 0.8% all the way up to 2.9%, so this landed toward the weaker end.
So growth is cooling. But I understand consumers are still spending. What's holding that up?
That's the surprising bright spot. Consumer spending, which accounts for more than 2/3 of all U.S. economic activity, actually surged at a rate of 3.2% last quarter. That's according to the BBC, NBC News, and Yahoo Finance. And it's a sharp rebound from the first quarter, when spending grew at just 0.5%. So households really opened their wallets, even as the broader economy slowed.
What's driving people to spend like that right now?
A few things came together. First, there's fiscal stimulus. Generous tax refunds from President Donald Trump's, quote, one big beautiful bill, end quote, gave households a financial cushion. On top of that, wealthier families have benefited from strong growth in asset prices, so they feel richer and spend more. There were also some one-off boosts, like the recently concluded FIFA World Cup and spending by nonprofits tied to the midterm elections.
Interesting. So even entertainment and politics moved the needle. What are people actually buying?
The BBC pointed to some specific categories. Americans kept spending on prescription drugs, on furniture, and on motor vehicles, particularly light-duty trucks. So it's a mix of everyday essentials and bigger-ticket purchases. That breadth is part of why the spending number held up so well. It wasn't just one sector carrying the load.
And on the business side, I keep hearing about artificial intelligence. Is that showing up in the data?
It absolutely is. Business investment has been propped up by a booming build-out of AI infrastructure. Michael Pierce of Oxford Economics, speaking to the BBC, said imports of microchips have kept the overall contribution to growth, quote, modest, end quote. But he was clear that AI-related investment remains, quote, the biggest game in town, end quote. Yahoo Finance added that spending on information processing, transportation, and industrial equipment also helped.
So if consumers and business investment are strong, what actually dragged growth down?
It came from a combination of domestic pullbacks and outside pressures. The Commerce Department pointed to a downturn in government spending, along with slowdowns in investment and in exports. Those offsets were big enough to pull the overall number lower, even with consumers spending briskly. Think of it as one strong engine working against several that are sputtering.
You mentioned exports. What's happening with trade?
Trade is a real weak spot. NBC News highlighted a widening trade deficit, and the numbers back that up. Exports tumbled 3.2%, down to $317.7 billion. Meanwhile, Imports rose 3.3%, climbing to $395.3 billion. So we're buying more from abroad while selling less, and that gap subtracts from growth.
Is any of that tied to the president's tariff policies?
In part, yes. President Trump's tariffs have shaken up trade relationships. Some of our partners are looking elsewhere. Canada, for instance, has been seeking new deals with Saudi Arabia and China, specifically to reduce its reliance on the United States. When longtime partners start diversifying away from us, that reshapes trade flows, and we're beginning to see the effects in these export and import figures.
Let's turn to the war with Iran. How is that rippling through the economy?
It's a major factor now, Grace. The U.S.-led war with Iran is in its 6th month, and it's delivering what economists call supply shocks. Hostilities broke out after U.S.-Israel strikes in late February. There was a temporary ceasefire in mid-June that briefly reopened the Strait of Hormuz, but that fell apart in early July after an Iranian attack on U.S. troops and the rejection of an Oman-led proposal.
And what did that collapse do to energy prices?
It sent them higher. After the ceasefire broke, there was a fresh wave of U.S. strikes, and President Trump announced a 20% toll on cargo passing through the Strait of Hormuz. All of that pushed Brent crude oil prices back toward $90 a barrel. And when crude climbs like that, drivers feel it quickly. Average gasoline prices have climbed back above $4 a gallon.
Are families managing those higher costs, or is it starting to hurt?
For now, they're absorbing it, but in a way that worries economists. The BBC and NBC News report that households have, quote, shrugged off, end quote, these costs by dipping into savings. The problem is that's not sustainable. To keep spending while wages barely keep pace with inflation, people have been drawing down their cushions. The personal savings rate fell to a 4-year low of 2.7% in June.
That does sound fragile. So how is the Federal Reserve responding to all this?
The Fed is walking a tightrope between slowing growth and stubborn inflation. On July 29th, just a couple of days ago, it voted to hold interest rates steady for the 5th straight time. Rates are staying in a range of 3.50% to 3.75%, but it wasn't a unanimous call. 3 committee members dissented, and they actually wanted a 0.25 percentage point hike.
A hike? So some officials think inflation is the bigger threat. How bad is it?
Inflation has now stayed above the Fed's 2% target for more than 5 years, so it's a persistent problem. Looking at the specifics, the Personal Consumption Expenditures Index rose 3.7% year-over-year in June. Yahoo Finance reported the GDP Price Index jumped 6.2% year-over-year, far above estimates of 4%. On a core basis, though, that same index rose 3.4%.
And what about core inflation, the measure the Fed watches most closely?
Core PCE rose 3.3% year-over-year in June. That's actually down slightly from 3.4% in May, so there's a hint of cooling underneath the surface. Federal Reserve Chairman Kevin Warsh has tried to manage expectations. He warned that there's no, quote, magic wand, end quote, to tackle rising prices. So the Fed is signaling patience rather than quick fixes.
When you put slowing growth next to rising prices, that combination has a name, doesn't it?
It does, and it's a word economists really don't like to say. That mix of stagnant growth and rising prices is called stagflation, and analysts are increasingly worried about it. It's a tough scenario, because the usual tools to fix one problem can worsen the other. Still, there's a more hopeful read out there too, depending on how you weigh the war's impact.
What's that more hopeful take?
Jamie Cox of Harris Financial Group, speaking to Yahoo Finance, suggested that without the energy shocks from the conflict in the Middle East, inflation would likely be heading lower. In other words, a lot of today's price pressure is coming from oil and the war, not the underlying economy. So if that conflict eases, the inflation picture could improve fairly quickly. That's the optimistic scenario worth watching.
So the big question going forward is really whether that war winds down.
Exactly. The economy has shown real resilience, with strong consumer spending and that AI investment boom. But the risks are stacking up, from the widening trade deficit to shrinking savings to nearly $90 oil. How the Iran conflict unfolds may be the single biggest factor for both growth and prices in the months ahead. That's what everyone will be watching.
Really helpful breakdown of a complicated moment. Ethan, thanks so much for making sense of it all for us this morning.
My pleasure, Grace. Always glad to help untangle the numbers.
Welcome back. Our next story takes us to California, where wildfire survivors are raising serious concerns about a legislative push in Sacramento. For the details, we're joined by our reporter, Chloe. Chloe, good morning. What exactly is happening here?
Good morning, Grace. So as of today, July 31st, 2026, fire survivors, consumer advocates, and even the insurance industry are all sounding alarms together. According to reporting from CalMatters, LAist, and Ground News, they're describing what they call a secretive, last-minute attempt by Governor Gavin Newsom to reduce how much utility companies pay for the wildfires they cause. And critics say it's being rushed through before the legislative session ends.
Rushed through. How? What's the mechanism they're worried about?
They're pointing to something called gut and amend maneuvers. Basically, that's when lawmakers take an existing bill, strip out its contents, and swap in entirely new language at the last minute. It lets legislation move fast, often with very little public scrutiny. And that's part of why survivors are so uneasy, because the official text of these proposals hasn't even been released yet.
So no one's actually seen the bill? What do advocates believe is in it?
Right, that's the frustrating part. The governor's office has confirmed staff are talking with lawmakers about catastrophic risk and wildfire recovery, but they haven't put out the text. Still, advocates and survivors say they know the broad strokes. That includes groups like the Every Fire Survivors Network, which was founded by survivors of last year's Eaton fire, and also Consumer Watchdog. They allege the legislation would do 3 big things.
Let's take them one at a time. What's the first?
The first is capping attorneys' fees. Now, on the surface, that might sound consumer-friendly, but advocates warn it could actually make it harder for fire survivors to secure legal representation in the first place. If lawyers can't recover reasonable fees, they may be less willing to take on these complicated, expensive cases. And that leaves ordinary victims going up against massive utilities largely on their own.
And the second concern?
The second is eliminating something called subrogation. That's a technical term, but here's what it means in plain language. Right now, when your insurance company pays out after a wildfire, it has the right to turn around and recover those costs from the utility or corporation that actually caused the fire. These bills would allegedly remove that right entirely, so the party responsible for the fire wouldn't have to reimburse the insurers.
That sounds like it could ripple down to regular policyholders. Is that the fear?
Exactly, and that's why the insurance industry is fighting this. Representatives from the American Property Casualty Insurance Association, including Denny Ritter, and the Personal Insurance Federation of California, including Rex Frazier, argue that if insurers can't recover their costs, premiums for everyday policyholders will inevitably rise. Frazier put it bluntly. He characterized the effort as utilities trying to, quote, chip away, end quote, at their own liability. So the insurers see this as shifting the burden onto them and their customers.
You mentioned 3 things. What's the third?
The third is limiting damages. Specifically, the proposals are alleged to cap the compensation victims can receive for pain and suffering, what's legally called non-economic damages. For a lot of survivors, that's deeply personal. These are people who lost homes, neighborhoods, sometimes loved ones. And critics say putting a ceiling on that kind of compensation minimizes what these families actually went through.
So if utilities pay less, who ends up covering the cost of recovery?
That's the heart of the opposition's argument, Grace. They say these measures effectively shift the cost away from utilities and onto the public. Ground News and CalMatters report the plan would likely raise the monthly surcharge on utility customers by $8.50. That would take the total from $2.50 all the way up to $11 a month, and that money would go to bolster the state's wildfire fund.
Now there's a campaign attached to this, isn't there? Tell me about that.
There is. The legislative path lines up with a campaign called Wildfire Survivors First, which is also sometimes referred to as Wildfire Victims First. And here's the key detail. It's funded by shareholders of the state's three major utilities. That's Pacific Gas and Electric, or PG&E, Southern California Edison, and San Diego Gas and Electric, along with three other unnamed organizations. So the branding says survivors, but the funding comes largely from utility shareholders.
What does the campaign itself say it's trying to accomplish?
Their spokesperson, Nathan Click, says they want urgent action on findings from an April report by the California Earthquake Authority. That report was produced under a law called SB 254. It argues that financial middlemen, things like hedge funds and trial attorneys, often get paid before victims receive money to actually rebuild their homes. And that same report recommended the surcharge increase to fund the state's wildfire fund.
But you said the survivor branding is being questioned. Why is that?
Yes, and this is where it gets really interesting. Jennifer Gray Thompson of the group After the Fire says she actually requested that her organization be removed from the campaign's supporter list. She did that after realizing the campaign lacked any actual fire victims groups. On top of that, a consumer watchdog analysis found that 66% of the non-governmental organizations backing the campaign had received roughly $7.3 million in grants and contributions from the utility industry between 2023 and 2025.
That's a striking figure. What about the utilities' influence in the legislature itself?
It's significant, according to Cal Matters. The three major utilities donated more than $1.2 million to sitting legislators during the 2025 to 26 session. So when survivors talk about feeling outmatched, that financial backdrop is a big part of the picture. It shapes how much sway these companies have as lawmakers weigh the proposals.
So how are lawmakers actually responding? Is there pushback inside the legislature?
The responses have been mixed, but several senators have raised concerns. Senator Sasha Renee Perez said she would oppose any limits on non-economic damages for survivors. Senator Ben Allen emphasized that whatever solution emerges has to maintain accountability for the responsible parties. And Senate President Pro Tem Monique Limon, along with Senator Josh Becker, noted that the current system is failing everyone, utility customers, insurance policyholders, and survivors alike. So even critics acknowledge something's broken.
And what is the governor's office saying to all of this?
Governor Newsom's spokesperson is a man named Anthony Martinez. He indicated the discussions are based on that California Earthquake Authority report about how financial burdens should be distributed after natural disasters. But notably, he declined to confirm these specific allegations, so he wouldn't say yes or no on the attorney fee caps or the elimination of subrogation. That leaves survivors and advocates filling in the blanks themselves, which adds to the anxiety.
Given that the text isn't public, what should our listeners be watching for in the coming days?
The big thing is the end of the legislative session, because that's the window where these gut and amend moves can happen quickly. If a bill suddenly appears with new wildfire language, that's the moment to pay close attention. Survivors from the Eaton Fire and other communities are asking people to watch closely and read the fine print. And the tension between keeping utilities accountable and keeping insurance affordable is really at the center of it all.
It sounds like everyone agrees the system's failing, but not on who should pay to fix it.
That's exactly it, Grace. You've got survivors worried about losing legal leverage and fair compensation. You've got insurers warning premiums will climb if subrogation disappears. And you've got utilities and their shareholders pushing a plan they say protects victims from financial middlemen. All three want reform, but the fight is over who ultimately shoulders the cost: the companies that cause the fires, or the public that pays the monthly bills.
Really important reporting, and a story we'll clearly be following. Chloe, thank you so much for breaking it all down for us this morning.
My pleasure, Grace. I'll keep an eye on Sacramento and bring you updates as the session wraps up.
That's our reporter, Chloe. We'll be right back after the break. Here are some other headlines. Tensions in the Middle East are reaching a boiling point as we wake up to a world of geopolitical fireworks. On Wednesday, July 29, 2026, United States forces made a huge splash, completing a heavy wave of strikes that hit dozens of Islamic Revolutionary Guard Corps targets across Iran. But Iran decided to throw some heat back, claiming they launched drone strikes on United States assets in Kuwait and Bahrain. At Kuwait's Ahmad al-Jaber Air Base, the drones took a shot at aircraft shelters, satellite communication systems, and equipment storage. Over in Bahrain, the Sheikh Issa Air Base saw power generators, navigation systems, and support buildings take a hit. The conflict is now drifting into new waters, as Egypt reported that a drone hit 2 ships at its Mediterranean port of Damietta on Thursday, July 30th. The attack sparked a fire, marking the first time this war has touched Egyptian soil since things kicked off in late February. Meanwhile, the IRGC is really cramping the style of global trade. The Fars news agency reports that the IRGC stopped 2 tankers from passing through the Strait of Hormuz, while 4 other tankers decided to steer clear and change course. Naturally, the oil market is feeling the pressure. Brent crude futures for September delivery rose 0.6% to $89.53 per barrel, and WTI futures climbed 0.5% to $84.04 on Friday morning. It looks like the economy is really feeling the burn. Turning to the political circus in Washington, President Trump is playing a game of musical chairs with his cabinet. On Thursday, July 30th, the president stated he may temporarily withdraw the nomination of Todd Blanche for Attorney General. Blanche has found himself in a tight spot due to resistance from Republican Senators John Cornyn and Thom Tillis. The 2 senators are digging in their heels over a Justice Department settlement regarding a sweeping immunity deal that protects the president, his family, and his businesses from past tax audits. The senators are also demanding written guarantees that a $1,776 million anti-weaponization fund meant to compensate those alleging government targeting, including January 6 defendants, will not move forward. While Blanche says the fund is dead in the water, the senators claim the Department of Justice is stonewalling them. In a social media post, Trump suggested he will keep Blanche as acting attorney general and simply renominate him once Cornyn and Tillis exit the stage in January. Senator Tillis is retiring, and Senator Cornyn is packing his bags after losing his primary to Trump-backed challenger Ken Paxton. It seems the president is just waiting for the clock to run out on his critics. That's all we have for now. Today's episode was made by Alexander King with Claude Opus 4.8, Gemini Pro 3.1, Gemini Flash 3, and Google Cloud Text-to-Speech. I hope you have a great day. I'll see you tomorrow, Alex.